It is, of course, a busy earnings week, winding down this morning. Twitter and then three Dow components, ExxonMobil, Chevron, and Merck, all reporting their second quarter before the opening bell. This after the world's largest internet retailer, Amazon, reported last night, posting a narrow miss on revenue, but a huge beat on earnings. As you can see the numbers right there. Facebook, meanwhile, posted the largest one-day loss in market value by any company in stock market history. It released the quarterly report and the disastrous commentary in terms of where growth goes next. We want to get right into it right now with LJH Investment Advisors Managing Director, Entertainment and Media Analyst Larry Haverty. Larry, good to see you this morning. Thanks very much for joining us. Is Facebook still a buy for you? Tell us how you see this situation.
Yeah, I absolutely think that Facebook's a buy, Maria, and I'm looking at the loss, and it's really pretty stunning. But a quarter ago, Zuckerberg told people he was going to hire 10,000 people who would not be revenue generating, and you had to expect that one way or another margins were going to contract. So the job of an investor is to figure out where you are now. And right now, you're 17 times cash flow. Facebook's really a very simple company. It eats by collecting ad dollars. The ad collection was 42%. I think basically it has to slow to the 25% area. But it has the ability in collecting ad dollars to have a very high rate of profitability for each incremental ad dollar that it collects. So if you assume that Facebook's going to grow probably 20-25%, which would be, God forbid, slowing from where it is now, in a year from now, Facebook hits a multiple of a conventional media company like Disney, Fox, those kind of things. Facebook's a much, much better business than a conventional media company.
Yeah, but do you still want to pay this price for Facebook, knowing that the growth story has, in fact, changed? You're right, 25% is a great number, 20% growth. But if investors have been buying the stock on an expectation of 30% or higher, does it still make sense to buy it at this level?
Well, I don't think a year from now, Maria, Facebook's going to sell at a market at a media company, old media company multiple. And Zuckerberg's got a bushel of cash. He can buy the stock. If he decides to buy the stock aggressively, he can support the stock, and the stock is going to go a lot higher than 12 times cash flow.
Wow. Dagan, how do you see it?
Pardon?
No, hey, Larry, she was just asking. I want to give you this statistic because I just think that this is shines a spotlight on how devastating that loss was yesterday. $119.1 billion in market cap loss. That drop is larger than the individual market caps of 457 of the 500 companies in the S&P 500. That's larger than the combined market cap of the bottom 20 companies in the S&P in terms of just the size of that loss. And Maria, on this very program earlier this year, when there was a lot of heat coming down on Facebook about them essentially selling individuals' data, and users didn't even know about it, I said it looked like that Facebook was reaching a level of saturation in terms of the ads that it could push at users, even a cap on user growth. And that's the problem that we saw yesterday, is those Instagram stories, they're not generating the ad revenue that say the feeds do on Instagram and Facebook. And that's where the growth is. That's where people are expected to spend most of their time on these platforms within the next year.
What do you say, Larry?
Well, I think all that's terrific, but you can't break your neck, Maria, falling out of the basement. And you're at 17 times cash flow. If it slows to 25, which I think it's going to, in a year, you're going to be at 12 times cash flow. In 2 years, you're going to be at 9 times cash flow. That company is worth more than 12 or 9 times cash flow. You make a decision in investing at the margin, where you are now. The stock doesn't know that it lost $170 billion last year. It knows that it's at 17 times cash flow now. It knows that if things break the way I think they are, and all the problems collecting ad dollars, they only went up 40% plus in the last quarter in a market that grows 5%. So they're gaining massive share of market in the advertising market.
Wow. All right. So you're holding on. You still want to own this stock?
I'm all in the stock.
Yeah, you still want to own this stock.
Oh, yeah.
Let me ask you this. James Freeman, Morgan, weigh in here because President Trump is weighing in on another key economic figure ahead of the release this morning. Speaking in Granite City, Illinois yesterday, the president predicted strong GDP numbers this morning. Watch this.
Somebody actually predicted today 5.3. I don't think that's going to happen. 5.3. If it has a 4 in front of it, we're happy. If it has like a 3, but it's a 3.8, 3.9, 3.7, we're okay.
Your reaction, Morgan, this is not the first time the president discussed economic data before the release, but he was talking about somebody else making the prediction. What do you think?
He's certainly playing by his own rules. It's not traditional for a president to do this, and he has set expectations quite high. Saying that, there's a lot going on in the news today, and if this number does have at least a 4 in front of it, I think that this is, as Dagan has pointed out the statistic earlier, this is going to be a huge, huge boon for him, a huge boon for the economy, of course, but if you look at it purely from a political perspective, going into the midterms, I think that this is the shot in the arm that the Republicans need to make the case to the American people to continue these policies and to continue in a Republican Congress.
Yeah, so what should we focus on in this GDP number? James, Dagan, what are you looking at specifically when we get this growth number in 2.5 hours?
Yeah, you want to see corporate investment. I think the White House is expecting really good numbers there. That was the point of the tax cut. And as you know, what the White House really wants is a 3.8% number or higher, because that allows them to say for the last year we've had 3% growth, and that hasn't happened in more than a decade. So our enthusiasm got curbed a little yesterday with the export and durable goods orders numbers, a little softer than expected, but I think everybody is rightly expecting a pretty strong report.
Yeah, for sure. We've had a lot of expectation there anyway.